Hey, trading fam, Chris here with the Mind Bloom Exchange, and we are looking at GameStop. We're going to do a full analysis and try to get it all done in less than 5 to 10 minutes of your time. So jump on this ride and we'll get into it. Right now, currently, what are we seeing? Well, first, we're seeing the trend came up, then we're dropping down. We still haven't broke this high at $40 yet, and we're still pushing down south. So that's sort of what we're seeing at this moment in time. We're still correcting. We haven't made a higher high yet, and that's okay. We're gonna figure out this together on where are we going from here and go from there. First things first, let's get some levels moving and go to some levels on where this market went to, as well as where can we go. All right, so that's the first level is 37.54. That's a decent level there. Then 48.13. Just want to make sure I'm doing it correctly. 56.67. And 84.33. Let's just leave those levels there at the moment in time. Now, if this market breaks this level of support, which is this, that's a nice little level of support pushing this market up. But if this market continues to break down, what does that look like for us? And I will tell you in a second. We're going back to 12 bucks, 12.57. So that's an important level to understand. I think even this level here, without that level there, we'll have the break to 12. So that's why I think it's very important to put that level in and move forward in that manner there. The next thing that we have is our Fibonacci retracements, which as such, we drop that in there. And then the next thing that we have is our pitchfork. And these are many, like 3 of the tools that I use all the time. I use quite a few others, probably about six to 7 different tools in my tool chest, tool belt. But overall, all the goal is to reduce risk, make sure that we're on point, and make sure that we enter where we're making money and losing less money. That's it. The game is to make more money, keep our war chest primed up, and make sure that we're all good to go from there. That seems good. We're going to quickly jump over to the weekly, if it lets me. Cool. So right now we're sort of being a bit sticky on this Fibonacci retracement level. As you can see, this market is thinking, are we going to break? Are we not going to break? The other thing that I wanted to sort of look at is that we readjusted that level there. So the next thing we're going to figure out is where can this level go to? Well, first it went to this level here, 28.66. We broke through that level. So not good, but if you're long GameStop, I would be looking at, I don't know, I would be looking at how to de-risk your position moving forward. That would be what my stance would be. And then if we bust through that level and we're not even, there, that's why I said this level here, as you can sort of tell, the $20 range is a sort of massive level. If we break this, hell's going to break loose. Now, it won't, but we are going to tank. And I think not many people will be happy, personally. So $8.70. So that's what I'm seeing there at this moment in time. And I am going to go like this. The next thing that we're going to do is drop our Fibonacci retracement as such. And then the next thing we're going to do is drop our pitchfork. And we're going to be more localized with our pitchfork. And our pitchfork is just a support resistance level at, it's like a parallel support resistance level there. Perfect. We got all the tools in place, overlapping, which I love. I think when you have tools overlapping, saying, hey, this level is a strong level, listen, listen to it. If you don't listen to it, the market will do what the market does. It does not care whether you've invested $1 million, $500,000, or you want the market to go up. The market will do what it will do. And unless you're a whale with a couple billion in the bank, running 300 mil or higher, or 200 mil plus, we as traders follow the market as best as we possibly can. Now, looking at this way that this market is moving, for some reason it's moving. We have to break that level of 26, 22, and then from there, 24, 23, and then from there, 27.67. But I sort of want to get in a little bit deeper into the weeds, and we got time. So I'm going to quickly jump to 4 hour because I like what I see on 4 hour a lot better. See it how this market, we broke this level of support, broke through, we retested this, we leveled on this parallel of support, went back to the retracement, and then danced between the parallel support, which is, I think that's a 50%, and then we went up to that resistance, which was support. It was support here, but it broke and got pushed down to our fib level, went up again, tried to retest, and now is breaking down. That's what I'm currently seeing at this moment in time. And let's give you the final analysis. So that broke there. So, and the reason why I want to look at both sides is that, you know what, the market is a very funny thing, and it can go up, go down, based on, manipulation. People can say, oh, the markets are maybe, well, human beings definitely manipulate the market if they have the opportunity to. I'm not saying they won't. Most markets have some type of level of manipulation, I would assume, is just, that's part of the game. If you're in stocks, Forex, crypto, and you're saying, well, the markets are manipulated, of course they are. They're meant, like the casino. The casino is meant for the house to win every single time. So the people that create these markets and create these ecosystems are making a ton of money there. And so this is what I see currently. If we can bust through 26.35, then 24.37 makes sense. And if we can bust through that, then I would say 23s. And then lastly, if we get to the 23 marker range, 23, 22 range, and we don't see a correction moving up as such, then we need to sort of look at further analysis on this market, possibly under 21 bucks, possibly bulldozering down to the 12s. So that's something just to be mindful with, right? If we can't hold above this median line and these levels here, so from 24 to 22, give or take, then we're in big trouble, and possibly we'll see a further breakdown if we can break 2164. So that's the idea. That's a perspective that I'm seeing currently at this moment. For this to be bullish in any way, personally, um, I would like it to break a new high. So personally, for me, anything above 27, 28 bucks makes sense. So I'll do that in bold here. So above that level there, 27 bucks, that's fair. Then that would sort of allow me to going, all right, we're transitioning out on the 4 hour and we've made a new high and we're busting out that way. But that's what I'm currently seeing is a down play. If we keep breaking 26, 26.41 from the big kahuna level, 26.32, then we go down to 24.60, which I will make a level 4 so you can see, and we'll make that a 1. 24, 24, 23, and then 22 is the final. And if that does not hold, then 21.50 should hopefully hold it. If that doesn't hold it, well, then 12s make sense. So it's not the best outlook for GameStop, but right now I trade what I see what I trade. And currently right now, unless we can break out of this top at 28, I see this is correcting down, bearish. Appreciate the time, appreciate the love. And if you want to stay with me for US 30 pound odd, Doge, and XRP, awesome. I will be making those videos right away after this video is made. If you have any questions, comments, like, share, etc., send me a DM or put them below in the comment section. I always love to hear people's different perspectives. It's interesting to see when people like, oh, it's going to 110. Because when you say that, I will always ask you why. Why do you say that? Like, what's your facts? What do you see? What levels do you see, and why? I have noticed, and maybe I'll just say in my own opinion, I've noticed a lot of traders will go, it's going to 30 bucks. Okay, why? You mean I could say that GameStop is going to 10. You mean it doesn't mean that I'm just making assumptions, making theses that aren't validated. My perception on it is we follow this market. If it can hold these levels, if it can hold 26.50, awesome. I'm I'm irrelevant towards GameStop, and what I mean by that is like I will if this market holds at 26.50, breaks this top at 28, I'll buy it. Why not? Like logically, it makes sense to me. But at the same time is we have to price action is a very key component of that and allows us to sort of see this market for what it is rather than what we want it to be. We all want the stocks to make millions of dollars for us and enjoy the goals and the dreams that we've set. But at the same time, we have to be very realistic on if this market is breaking this price action low, made a lower low, and made a lower low, it's just one level at another level. If we're just dancing, we're dancing between levels, is what I'm saying. So I want to get that clarity out of the way. If you want to assume where the market's going, awesome. If it works for you, great. But for me, I try to look at a more realistic level. When I first started trading, I'm like, yeah, it's going to 22 bucks or $5 or whatever it is. And I noticed that, when I didn't get it, it kicked my emotions a bit. It kicked my anxiety up a bit more. And I was like, shit, I didn't get that level. And the thing that I've noticed is like the ocean, the market moves up and down in between lines and levels. The ocean moves up and down, in and out, whether you like it, whether you don't like it. The goal for us is to trade what we see what we trade, and try to remove the emotion out of it and be level-headed and level-keeled, I guess, in the process. My goal is I want to see you make millions of dollars, do whatever your goals are, and do the same. Like I want to travel the world more. I want to live in a warm climate for 6 months of the year, trading, building out mental health community centers, and helping people. That's what I want to do. That's my passion. That's what I love. So you know what, we have to look at the markets in a different way rather than assuming where the market will go. We have to put levels in there, parallel, fibs, horizontal. You can even go vertical if you want to and start doing levels that way. You can do spirals if that works better for you. Um, for me at this moment, this works. It's simpler, it's cleaner. But I've layered 10, 12 different indicators on top or different technicals on top, and I found that at the end of the day, we're just trying to find where the market's dancing in between levels and price action. Price action is king. It makes a lower low, lower high. What does that mean? Bear. If it makes a higher low, higher high, what does that mean? We're transitioning, possibly getting out, and we're going bull, right? And that's at the end of the day, that's the simple essence of it. I know I've talked on and on and on. I'll cut the chase. Have an awesome, awesome day from my trading desk to yours. And if you need any questions, send me a DM. More than happy to help wherever I can. Take care.